taxes. How much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Who are U.S. Open tennis champion Emma Raducanu's three dream dinner guests?
Daniel Ricciardo, Michael Jordan, and Tom Keane from Bloomberg.
She understands you.
Funny and very understandable.
I am reading in on tennis like nobody.
Yeah. Champion approved Bloomberg surveillance. Mornings on Bloomberg Television and Radio.
I'm Mark Crumpton with Bloomberg's First Word News. In the UK, the main opposition party is preparing for Prime Minister Boris Johnson to call a general election as early as next year. Strategists believe the Prime Minister might go to the polls before voters feel the impact of higher taxes. Senior advisors have told the Labour Party leader that they should be ready for a snap election next spring. European nations dominate the top of Bloomberg's COVID resilience ranking for a third month. Ireland is now at the top of the survey, while the previous number one, Norway, fell to the 10th spot. Ireland has been steadily moving up since the start of 2021, when it had the worst outbreak in the world. Meanwhile, the Delta variant has left the United States reeling. It fell 3 spots this month to number 28. Independent investigators mandated by the World Health Organization to probe allegations of sexual abuse by its staff in the Democratic Republic of the Congo have cited, in their words, structural failures and, again quoting, individual negligence in a new report. The abuses were committed by local personnel as well as by members of teams in the country to fight an Ebola outbreak from 2018 to 2020. Brent oil has broken through the $80 a barrel barrier. The leading crude benchmark rose for the 6th day in a row to the highest since October of 2018. There are signs that demand is running ahead of supply, and there has been a flurry of bullish price predictions from banks and traders. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It is 1 p.m. in New York, 6 p.m. in London, 1 a.m. in Hong Kong. I'm Alex Steele. Welcome to Bloomberg Markets. Here are the top stories that we're following for you from all around the world. Stocks deeply in the red as yields surge. U.S. investors digesting a steady menu of news, from consumer confidence falling, home prices surging, and nervousness about what's coming out of D.C. On one hand, U.S. Treasury Secretary Janet Yellen sends a warning to Congress that cash supply will effectively run out around October 18th unless the debt limit is suspended or increased. On the other hand, the Fed gets ready to unwind its stimulus, prompting to rethink on bond yields. Plus, Senator Elizabeth Warren says she won't support Fed Chair Powell for a second term as head of the U.S. Central Bank. So let's digest all of this and show you what's happening within the market. So the S&P around the lows of the session off by over 2 percentage points. All of the individual sectors in the S&P are in the red, with the exception of energy that is trying to eke out a gain with Brent at 80. Now, the damage that's been done, I do want to highlight what's happening in tech. The NASDAQ 100 off by almost 3 full percentage points. If you have higher yields, that long duration trade is going to get taken out to the woodshed, and that's what you're seeing in those large cap blue cap tech names. And you can also see it in the likes of semi. This is the SOX index, so the semi index, that's also off by almost 4% now, really picking up some steam to the downside. And the blame, you could argue, would lie right here with the U.S. 10-year at 152, yields moving higher about 3 basis points. In the 30-year, you're looking at yields over 2 percentage points. All of that wrapped into the debt ceiling, as well as higher inflation and signs of the consumers rolling over just a touch. Now, in the middle of this, we have to digest what's happening in the auction market. A 7-year Treasury auction coming out right now. Want to bring in Ritika Gupta from Bloomberg with more. Hey, Ritika.
Yeah, hey, Alex. So we have that $62 billion worth of the 7-year Treasury now coming onto the supply here. And we actually see the 7-year auction drawing in a yield of 1.332%. That compares to the pre-sale when issued of 1.324%. So we're seeing a higher yield here. So it's tailing a bit of softer demand here. Now, this is interesting because we really wanted to see if it would actually see some dip buying like we saw with the 5-year yesterday, but perhaps not so. We also see that bid to cover coming in at 2.24. That is also another demand indicator. So just softer than the average of 2.31, and the previous auction was 2.34. Dealer allocation coming in at 19%. That is below the average of 21.26%. And indirect bidders, this is usually a proxy for foreign demand, coming in at 60.1%. That's versus the average of 58.9%. And I mentioned as well that we're seeing the average over the past 6 auctions, that has been 1.227%. So this has actually been one of the cheapest auctions since 2020. That was the expectation. We'd get some momentum for dip buying, but we don't seem to have got that, Alex. So that is the big takeaway. So we're not really seeing what we saw in the 5-year yesterday. We're seeing demand just a bit softer. But generally, you do kind of see with the 7-year that they do demand a bit higher concessions than you get with that 5-year. But of course, we have seen that Treasury sell-off continuing today, even across the curve. The longer end, that 10-year, we sit about 1.52% there, and 30-year, some more selling there. We sit yields about 2% as well. So that is your main Treasury auctions done for this week: the 2-year, the 5-year, and the 7-year today, Alex.
All right, Ritika, thanks a lot. Really appreciate that as the belly really digests any news from the Fed. So speaking of rates, there is some real movement now tied to U.S. Treasury Secretary Janet Yellen's comments on today's hearing regarding the debt ceiling.
It is imperative that Congress address the debt limit. If not, our current estimate is that Treasury will likely exhaust its extraordinary measures by October 18th. America would default for the first time in history. The full faith and credit of the United States would be impaired, and our country would likely face a financial crisis and economic recession as a result.
Okay, so usually these things get solved. However, you are starting to see a market reaction. So this is a T-bill that's due October 19th, the day after Janet Yellen highlighted as the debt ceiling. And you can see how yields really popped higher once the deadline was made, up by about 3 basis points. You could argue it could get a lot worse, but there is stress starting to come through in the market. I want to break more down with Mickey Levy, senior economist at Berenberg Capital Markets and a member Shadow Open Market Committee member, and Michael McKee, Bloomberg National Economics and Policy correspondent. Mickey, the stress on the market with the debt ceiling, how serious are you taking this right now?
Well, typically, I don't take the debt ceiling very seriously. Usually it's about political theatrics, and at the last moment, Congress comes up with some resolution, and I put a very low probability on actual the Treasury not servicing the debt. However, this time, because the budget process is just so dysfunctional in so many ways, and the Congress is trying, different factions of Congress are trying to attach to the debt ceiling bill different legislation that's now pending in both the House and Senate. it's a complete mess. So we shouldn't discount smooth sailing. I think they'll eventually come up with something, but it really reflects just how dysfunctional Congress is, and that's a warning in and of itself.
Last time we saw this, Alex, 2011 was when the S&P gave the U.S. a downgrade for its political function, not because they thought the U.S. was going to default. So I suppose there could be some sort of reaction like that. The biggest question is, how do Democrats proceed now? We may find out more this afternoon. But the Republicans are demanding they separate the bill that would fund the government from the debt ceiling and put the debt ceiling into the reconciliation bill. And just procedurally, that would take some weeks, which is why I think Janet Yellen came out with that date today to give the Democrats a good idea of how fast they have to move on this. And of course, as you know, this could lead to things like the vote-a-rama with lots of amendments, et cetera. And Republicans could really slow down this process and take us right to the brink. But I think I agree with Mickey. You really can't believe that anybody would drive that car over the cliff.
Yeah, exactly. It's just like when we get it. So the other piece of news that really stood out to me from the testimony was Senator Elizabeth Warren making some very strong statements against Fed Chair Jay Powell. Here's what she had to say.
Your record gives me grave concern. Over and over, you have acted to make our banking system less safe, and that makes you a dangerous man to head up the Fed, and it's why I will oppose your renomination.
Mike McKee, to you first. What was different about Elizabeth Warren this time? I knew she didn't like Jay Powell.
She's made it clear she would prefer some. She said she would actually vote against him. The question is, how much power does she bring to the table with that threat? We know that Janet Yellen has, or we've been told that Janet Yellen has endorsed Jay Powell for another term. So where does Joe Biden go? Does he go with his Treasury Secretary or does he go with Elizabeth Warren? And as the old joke goes, how many people in your army? How many people can Elizabeth Warren bring along? We don't know what Sherrod Brown, the chairman of the Banking Committee, thinks. And if he were to join with Senator Warren, that would be a tough time for Jay Powell. But if he doesn't, if he stays neutral or if he offers to support